Every tech revolution starts somewhere unexpected. For CoreWeave, it was a garage in New Jersey in 2017 and a trio of commodity traders: Michael Intrater, Brian Venturo, and Brennan McBee. They started Atlantic Crypto, mining Ethereum with their own graphic parts. But as the crypto winter hit and prices crashed in 2018, their hedge fund shattered. Those racks of GPUs built for coins proved far more valuable when repurposed for renting out raw computing power. By 2019, Atlantic Crypto had morphed into CoreWeave, a high engine for high-performance compute. CEO and trader came from energy trading, where big swings in risk management were daily reality. Venturo designed trading software, and McBee specialized in analytics. This financial DNA shaped a company able to adapt fast and play a bigger, riskier game than its tech rivals. CoreWeave's secret sauce isn't just GPUs, it's how they built their cloud. The platform is Kubernetes native, meaning developers can spin up complex workloads as easily as starting a Netflix binge session. Unlike the big hyperscalers, CoreWeave is built entirely around AI, graphics, and scientific modeling, not general business tasks. Their mission control dashboard gives AI teams supreme flexibility, down to tracking exactly which hardware is running their code 24/7. For OpenAI, Meta, Stability AI, and Microsoft, that means faster model training, less downtime, and full transparency. And in 2025, CoreWeave became the first to offer Nvidia's RTX Pro 6000 Blackwell GPUs at scale, giving next-generation AI teams the power to run huge generative models in days instead of weeks. CoreWeave's business model is not just one innovation, it's several layered together. At the core, it's a usage-based rental model for GPU cloud services. Think of it as building a virtual superhighway or charging tolls every time someone runs an intensive AI workload. But most of the revenue comes from direct multi-year deals called take or pay contracts. Giant clients like OpenAI, Microsoft, and Meta sign up to pay billions over several years, whether they use every bit of compute or not. And so here's the magic. But wait, before we get into the magic, can you guys do me a quick favor and just subscribe to our channel? Thank you, it means a ton. So back to the video. CoreWeave gets large upfront payments even before chips and servers are installed. This cash funds rapid build-outs of cutting-edge GPU clusters and new data centers. When contracts end, the infrastructure doesn't go dark. It gets redeployed or sold as on-demand compute to other clients, maximizing return. This strategy offers nearly guaranteed revenue, a massive advantage in a capital-heavy industry. In 2025, over 96% of revenue was from committed contracts. Just 4% was spot or on-demand work. Most of these deals are with investment-grade enterprise clients, so risk of non-payment is pretty low. Notably, as machine learning needs shifts from model training to inference, this model faces new challenges. Hyperscalers want flexibility and lower cost, not expensive long-term contracts. Analysts say the rental shop approach works for now, but needs adaptation for future industry changes. Behind CoreWeave's numbers are stories of scientific and business breakthroughs. Their biggest customers, Microsoft, OpenAI, Meta, Nvidia, Stability AI, Alphabet, IBM, Cohere, all use CoreWeave's clusters for many things, including AI model training at industrial scale, think like GPT-4, GPT-5, and image video diffusion models. Then there's the real-time inference for massive applications, like search engines and assistant platforms. Not only that, you have the pharmaceutical simulation shaving months off drug discovery cycles. These clusters are used for visual effects renderings for Hollywood post-production, hundreds of hours of footage processed in days, not weeks. While the top two clients made up nearly 80% of revenue in 2024, CoreWeave expanded quickly by adding hundreds of AI labs and developers through deals. The ecosystem now spans more than 1,400 enterprise and lab clients, driving demand for scalable and ultra-responsive infrastructures. So, companies choose CoreWeave for a few reasons. Higher performance GPU clusters, up to 20% faster than other clouds. Fewer workflow interruptions, there's a 50% reduction. Elastic scaling, real-time support, and granular control with their mission control AI dashboard. Whether it's Wall Street running quantitative strategies, researchers probing genetics, or artists generating digital worlds, CoreWeave's AI-first cloud delivers that power. CoreWeave's entire stack is custom designed for speed. As AI model sizes explode, delayed compute means lost months and millions in productivity. By controlling both hardware and software layers, CoreWeave is often weeks faster to deploy than Amazon or Google. Their rapid expansion is legendary. $3.4 billion in UK data centers added in 2025 alone, opening 2 huge sites in 6 months. The company already operates 32 facilities and over 250,000 GPUs, and scaling up even further as AI gets bigger. What's a gigawatt? 1 gigawatt, or GW, equals a billion watts. For reference, the largest nuclear reactor in the US generates about 1.3 gigawatts. Enough to power a city of 1 million people, all homes, lights, factories, and offices combined. When CoreWeave acquired Core Scientific, it instantly gained control of 1.3 gigawatts of active data center power across America, plus another potential 1 gigawatt for expansion. So why does this matter? AI and high-performance computing consume staggering amounts of electricity. Owning sites with dedicated energy contracts lets CoreWeave build new clusters as fast as demand explodes. No need to wait for grid upgrades or rental negotiations. It means true vertical integration, from the power grid to custom infrastructure to the software serving developers worldwide. Core Scientific, once a crypto mining giant, had already adapted much of the footprint for AI workloads. CoreWeave's ownership means $500 million a year in cost savings, tighter control of deployment timelines, and much lower risk of capacity shortages or rent spikes. Operationally, these data centers being retrofitted for AI. Got liquid cooling for dense GPU racks, fiber bundles for ultra-fast networking, redundant power systems for stability. You have community growth, so like local jobs and partnerships in these new data center regions. Everything is going good for this company. But like all good things, there's some competition. CoreWeave faces fierce rivals in the new gold rush for AI compute. Their direct competitors start off with Crusoe, their sustainable GPU cloud, naturally gas-powered, attracting eco-conscious clients. Then there's Lambda, affordable developer clusters, fast growth, focus on regional scale, and custom AI workloads. And let's not forget about the hyperscalers, AWS, Azure, Google Cloud. These giants are ramping up vertical AI infrastructure, custom silicon, more modular pricing, and global reach. All are dropping prices, adding new hardware, and deepening networking capabilities. How does CoreWeave differentiate? Unmatched speed, deploying new clusters in weeks, not quarters. Vertical integration, controlling power, hardware, and the physical build-up. Bleeding edge hardware access. We're talking about Nvidia partnerships, especially having exclusivity to the Blackwell GPU launches. And then there's the deep client ties. Multi-billion-dollar contracts represent trust, and they lock in. And of course, the higher reliability and elastic scaling, 50% fewer interruptions, and they have the real-time support. But as always, there's a strategic risk that loom. Capital intensity means $25 billion of debt and interest expense at $267 million per quarter. They also have high customer concentration. 80% is Microsoft and OpenAI. If one leaves, cash flows can swing sharply. And also there's the shifting industry models. As AI moves towards inference, which are run models, not just trained, demand for bleeding edge GPUs could fall. Cheap, efficient, more flexible providers may gain some ground. CoreWeave is betting that controlling every layer plus speed and reliability will be enough to fend off both upstarts and older giants. CoreWeave's expansion is fueled by unprecedented capital investment. In 2025, capex totals $20 to $23 billion, while revenue targets hit $5 to $5.3 billion. By 2028, total debt may reach $40 billion. Interest alone could outpace operating earnings for years. Cash on hand hovers near $1.2 billion, augmented by early contract payments and asset-backed financing, mostly secured by GPUs and data centers. The path for profitability is long but visible. Analysts anticipate net income positive by 2027 as cost savings kick in, interest normalizes, and hardware utilization stays high. Revenue CAGR is forecast near 106%, reaching $16.7 billion by 2027. Yet, equity holders see no cash flow for many years. Bondholders and lenders get priority returns, and risks around industry models, debt service, and customer loss remain. Strategically, CoreWeave's vertical integration is its moat. hardware control, supply chain management, and ability to weaponize supply bottlenecks against rivals. Still, commoditization is a real threat. If AI compute becomes a low-margin utility, price wars and infrastructure overbuild could erode future profits. CoreWeave's infrastructure isn't just for training chatbots or image models. It powers precision medicine and real-time clinical trials, autonomous vehicles, and robotics at city-wide scale, high-frequency trading and risk simulations for global markets, film, gaming, and content generation transforming storytelling. The company's community impact includes job creation, local energy investment, STEM education programs, and regional innovation hubs, making each data center a driver for economic growth and technical skills. Looking forward, CoreWeave wants to define the digital backbone of the AI age, serving not just the lead customers, but the broader enterprise, research, and developer ecosystem. Their challenge? Balancing hyper growth with capital discipline, adapting to changing customer demands, and staying a step ahead of rivals, old and new. Hey guys, if you're still watching this video, thanks a ton. Please, if you can subscribe to our channel, it'd mean a ton to help our algos, and maybe we'll keep this thing rolling.